All right, let's dive deeper into the numbers here with Ali Mogharabi. He's Morningstar Research Senior Equity Analyst. Ali, let me just start with your take. What stood out to you in the numbers that we got after the bout?
Well, I think the main thing that stood out was basically progressing towards profitability on the delivery side of the business. So lower EBITDA losses, I think, was pretty positive, while at the same time, of course, maintaining that very, very strong top line growth on the delivery. And you combine that with the fact that these guys can still keep mobility business profitable, again, based on an adjusted EBITDA basis. And that's pretty impressive. It makes it more likely that at least one quarter during this year, the delivery side and overall the company will be able to generate positive adjusted EBITDA. So I think those two pretty much stood out. The other thing that stood out was that these guys are actually trying to increase the volume of their delivery services by tapping into various different products, various different types of deliveries. So as you mentioned previously, the acquisition of not only Postmates, but also Drizzly, but also remember, they bought Corner Shop in 2019. So they're basically trying to expand further in order to continue to remain with the growing demand for on-demand delivery. But I just want to mention one thing to keep in mind is that once the economy basically recovers, we are going to see a return to higher demand on the mobility side, but at the same time, it could somewhat negatively impact the delivery side of the business.
Yeah,
so you should look for revenue deceleration on delivery.
That was going to be my question, because it's kind of crazy how fast that Eats side of the business has grown, and I think it's exactly to what you're pointing to: more people staying at home, ordering delivery, eating at home, not going out to restaurants, and of course we'll see rides come back. That's what we've heard from Lyft and Uber once the economy starts to reopen. But how does that, maybe on a profitability front, how does that shift things for Uber if you do expect more of that rides business to come back, maybe at the expense of Eats?
Yeah, I think to certain. Well, I think it will mainly impact the top line. I think on the bottom line, they will still progress towards profitability, because one thing to keep in mind, based on the Q4 numbers, is that the take rate on the delivery side actually was stabilized. So it remains still at around 13%. So that pretty much is an early indication that pricing, when it comes to food delivery only, that pricing has stabilized. So if that's the case, when you've got basically the top two dominating the market, DoorDash, of course, number one, and Uber right now, number two, then you could expect, combine it with the pricing stabilization, maybe a slight deceleration in demand, then you could actually see these guys creating some operating leverage and actually become profitable. So I don't think it will impact profitability that much.
Ali, when you look at where Uber's trading right now, we saw it slipping yesterday and after hours, but it has hit a new high in the session today, up about 0.7%, 63.66 a share. What does it trade on? Is it still on the ride sharing side of the business, just how significant the footprint is there? Or is it time for investors to maybe shift their attention more to sort of value it as a food delivery company?
Well, I think it's actually both still, because remember, there will be a turnaround in the economy. The pandemic will end at some point. The timing is still very unclear. But once that happens, then you're basically looking at a company with pretty much a diversified revenue base. So on mobility and on demand. And in terms of on mobility and delivery, and in terms of the delivery, it's not going to completely go away once the economy recovers. So, I mean, I think one of the changes that we're seeing due to the pandemic is the consumer behavior to basically be focused more on on-demand delivery of various products in addition to foods. So that change in behavior could actually be sustainable for a long time. So I think. And again, to answer your question, I think it's a combination of both. It's a combination of recovery in ride sharing and also the continuing growth, although decelerating, but the continuing growth in the delivery side of the business.
Ali, it's always good to get your take. Ali Mogharabi, Morningstar Research Senior Equity Analyst.